The Hedgeless Horseman here. It's March the 16th, 2024. First of all, thanks to the sponsors. Markets ended down on Friday. Silver actually up and copper up. Crypto is, stalling out, I guess. So I'll do some PDAC updates in this video, or impressions, and some of the companies I talked to. I mostly went to PDAC not for actually new due diligence, really, more to connect with the people I know. The stores I already like, because it's like there's no shortage of buys. As soon as someone pitches me a store, it's like, hey, at these prices, when we're at this far into a bear market, it's like almost everything looks enticing. So at some point you kind of have to, not that you should perhaps, you should always be looking for opportunities, because obviously you can have 20 different buys, but some are better buys than others, and maybe there's a buy that you haven't heard about and then you get pitched at, etc, etc. So I guess I'm a bit, overcooked with opportunity, in the sense that it's just exhausting sooner or later, because I find it's very taxing to compare all the different companies to each other as well. It's easier to find something, looking like a buy, than to, qualitatively speaking, compare them to other juniors, because then you have to, compare everything. It's like jurisdictional, yada yada, asset management, blah blah blah. But it's like when prices are low, everything looks like a buy, but it takes a lot of time just to sip through. It's like which are the best buys and all of that. But at the same time, you at least have, diversification. If there was a time you can afford diversification, it would be now, because again, almost everything is cheap. And if you just follow the median junior going into the next upwave, you're gonna be up a lot. You don't need to find the 1% of companies that are actually let's say good investments, because everything goes up in a bull leg. But anyway, I thought I would just start out with some investing theory, and this, in my opinion, is one of the most important takeaways for I would say many different reasons. But it basically, I was gonna say, is when do you find opportunities? There's stuff in this sector right now, again, it's like everything is cheap and all that, but there's still stuff happening every single trading day, in a sense, where the risk reward just goes up and down, mostly because of price, because there's not a news release every single day, but prices tend to change almost every single day. And of course, after a 3-year downtrend, a bear market, almost every good story is an opportunity in itself. So broadly speaking, there's opportunities everywhere, but at the same time, if we go into on a micro level, opportunities can change a lot in a short period of time. So that's also why I'm always, as I think I've stated from the beginning, it's like I've been all in since 2015. I just switch between companies, let's say. I always try to be in the cheapest ones, or obviously the best opportunities I can find. I'm not saying they are necessarily the best opportunities. It's just to my knowledge they are, or it's like the ones I know about, because I bet there are stores out there that might be better buys than 90% of the juniors I own, but I don't know those stories. And same token, is like, I'm gonna be missing 99% of all 10 baggers. I just assume that, because 10 baggers tend to come out of left field. They tend to be high risk, but obviously if there was ever a time one would have a best shot at owning a future 10 bagger, that would be in the most depressed market we have seen since 2000, since the early 2000s. So if you want 10 baggers, there's no better opportunity than investing in deep in a bear market. I mean, I think there are some trading sardines and beta picks that are probably going to become 10 baggers, and that's without doing much. You can't say that at the highs of 2011, or even when the junior market was very hot in 2016. Getting a 10 bagger from there in beta plays was hard. I mean, many 10 baggers are actually down, or many beta plays are down 90% from this junior top here, even with gold price being up here. I mean, it's pretty incredible if you ask me. But that's the dislocation, you know, the old guard is talking about. It's like the biggest dislocation they have ever seen. And of course the interesting thing is that whereas I think there's opportunities in nickel and PGMs, that's mostly because nickel price is down from the highs and PGMs have fallen a lot from the highs, and the sentiment is in the toilet. The funny thing with the gold and gold miners, of course, is that gold is pretty hot, but the gold equities are down here, especially the junior ones, which is absolutely mind-blowing. I mean, again, I would understand it more in this time in 2015-16. The gold equities were in the toilet and gold was in the toilet. It made sense why they were trading like they had nothing. I mean, the juniors didn't have anything that was remotely economic, and at the time most mines were not economic. Now many mines still throw off cash flow. The major gold companies throw off free cash flow. They have some of the highest dividends they've ever had, or at least in the last few decades, I think. And still the gold equities, the gold juniors are trading like their projects would be worthless at this current gold price, which is again absolutely remarkable. So as always, from a margin of safety perspective, you cannot beat the gold equities simply because where gold is trading. But back to the point, spontaneous opportunities. So it's like we know most people look at price and follow price, and that dictates their due diligence if they think the story is going well, etc. It's like, you know, oh, I should buy this because the share price has been going higher. It's a story that's working, whatever. I mean, that might be true. You shouldn't not buy simply because something has gone up. But my point is that most look at price alone and don't relate it to values. I mean, without having planned it or foreseen it, it's like, when do opportunities actually change? Well, if value goes up, I'm thinking a news release, price unchanged or down. Because if value went up, price went sideways or down, obviously this is a increasing price to value gap, so that's a value investor opportunity. Then you have value unchanged but price gone down. Yeah, here you have an expanding price to value gap. And then you have value down but price down more. Then you have a expanding price to value gap. So opportunities pop up all the time, especially in this kind of low liquidity, bearish sentiment kind of deal, where you mostly see stuff like this. I mean, in a really good market, it would probably be like, okay, you know, first of all, they're not necessarily undervalued to begin with, but then you have value gone up, but price goes up, something like that. Or price goes up and value stays put. So that's more, you know, reasons to sell, because like, okay, now price is overshooting value even more, and that's what tend to happen. That happened here when the silver miners were pricing in let's say $30 silver when silver was at maybe 25, or when silver, I think it reached actually like 27 or something, and maybe the silver miners were pricing in 35. So price was higher than value back then. But especially in the gold junior sector right now, the gold equities are traded at a discount to the current gold price. So they're pricing in a price crash that has not happened yet. And again, like I think I said in the first PDAC video, obviously that's a pretty compelling risk-reward scenario where it's like you're paying as if a crash has happened. You're paying fair price for a crashed gold price. So if gold crashes, you paid fair value. But you're buying it, the equities at a discount to where gold is right now, and especially, I mean, even discount if gold goes higher. So if you're buying this scenario, we're up here. I mean, that is margin of safety. That is that shouldn't obviously, I think, be here. I mean, we shouldn't have this opportunity, and that's obviously why the billionaires are pounding the table right now, and even generalist billionaires are getting into the mining space, because like, how do you lose in this scenario? If a crash happens, you didn't lose out. Yeah, share price might go down a bit, obviously, but like you, as a value investor, you didn't even overpay for that. You paid for a crash in gold price. You paid a price for, let's say, gold equities that reflected a $1,600 gold price. So if gold goes to $1,600 gold, you didn't overpay right now. You're way underpaying for the current gold price, and especially if gold price goes higher. So it's like, how do you lose? If you overpaid, if gold price goes down to $1,300 maybe. But I mean, I don't know if even that would be overpaying right now, because again, it's like there's a lot of juniors out there that are pricing in no chance in hell that they have something that's ever going to be worth something. And I think that's simply wrong. And the ones that actually have something that is worth something right now are pricing like priced like they don't have anything that's worth anything now. So it's just a Mr. Market in the equity space is totally, in my opinion, insane. But you have all these different things. So it's like, I mean, let's just take some recent examples. Like these are typically triggers that makes me value shuffle, let's say. I've talked about Altamira Gold, for example. Okay, let's look at Altamira. What has happened recently? Well, we saw I think it was January, when they announced that the first hole was already deeper than was planned. Okay, that's obviously an encouraging signal. It's like, okay, they're obviously seeing something that appears to go down longer than they thought. I mean, maybe from the get-go they thought that, hey, even if we find something, you know, if we see what we think might be mineralization, we're still gonna stop at 120, 140 meters or something. So that might have been the plan, but like something obviously changed and made them push the first hole even deeper. I don't know what that is. Is it for a geological reason? Perhaps, but still they announced the addition of a second drill rig at the same time. That's an increase in burn rate and would obviously prove up what they might have even quicker. So it's obviously a bullish signal, I would say. I don't think you can work your way around that. Because otherwise you'll have, okay, if it's for only geological reasons, why are you adding a second drill rig? If you're still, you know, trying to figure things out. You don't need to increase your burn rate to figure things out. I mean, that's the opposite of kind of figuring things out, if you know what I mean. So I take that as a bullish signal. What did happen with price? So I think value went up. I mean, risk-adjusted value went up on that news release. Price didn't go anywhere. So that's why I started buying more Altamira at the time, because I think value went up with risk-adjusted value went up with chance of success going up, but price stayed put. So if I liked it before, I think it was even more undervalued since price was unchanged. And now recently, the last private placement, the shares in that private placement that got they are held up for 4 months, that hold up got lifted, so they're free trading now, and we have seen some selling. Of course, did anything change? Obviously not. It just allowed people, for whatever reason, if they need money, want to sell, they risk whatever they can. So we've seen some sales on the open market. So price went down because people could sell. Did value change after the the shares became free trading? Obviously not. So that's value unchanged with price going down a bit. So I hope you get my point. I mean, there's stuff happening all the time. Either it's price changing with no change in value, or there's like value changing with either no change in price, exaggerated change in price, or not enough change in price, etc., etc. So again, it's like value change, price down. That would be the case, in my opinion, in Headwater Gold. That went down to, it made a ticket 13 cents. Did anything happen? No. Okay, Headwater announces additional high grade, and that was the 13th of Feb. This was 29th of February. I think it reached an enterprise value of 6.5 million Canadian, which is, in my opinion, absolutely surreal. Given that what's 6.5 million, because they're free carried. I mean, and as far as we know, the Newmont is still in this deal. Did that make sense? 6.5 million Canadian for their entire portfolio, including Spring Peak, and they have Newmont as a partner, because Newmont obviously gobbled up Newcrest. I don't think that makes sense. So I bought some, or I don't remember when I started buying. And I had done some, value shuffling before, where it's like, I don't know when it was, maybe around here, I sold some to buy inflection, and then Headwater started going down. Again, not predicting it, but when it happened, it's like, okay, I sold other stuff simply to buy Headwater, because that was a case of value unchanged, but price down. So that's, in my opinion, an increasing opportunity popped up, but it wasn't for the same reason as ALTA Gold. Well, except now when free shares are trading and price went down without value going anywhere. And then of course there's value down but price down more, and have a listen to this, one of the new Rick Rule interviews.
So I'm attracted to the gold price, and I'm attracted to the hate that you see in the gold sector. I'm attracted to a market that's irrational enough that when Panama nationalizes Cobre Panama, which accounts for 15% of the market cap of Franco-Nevada, that Franco-Nevada sells off by 42%. This is a market that can't add or subtract,
So he's talking about this scenario here where an opportunity presents itself, and this is even when value went down. So price should go down. It's simply that price went down way more than value, and again, that's a hallmark of bear market sentiment. The risks get exaggerated, everybody's looking for a reason to sell, and of course when the price is already down, everyone is sensitive to selling. Mood is bad. They don't really care. I mean, like you see a lot of people on Twitter, it's like, I'm down so much, so why does it matter? So due diligence gets thrown out the, baby with the bathwater type thing, because nobody gives a crap anymore. When people are down enough, they get depressed, despondent, or whatever it's called. So they become lazy. So they stop thinking there's like opportunity, because they've only seen one thing, and that's like everything is taking a hit. So it feels like it doesn't matter. I mean, there are some exceptions, obviously, like Snowline Gold and stuff, but like people feel that due diligence, etc., doesn't really matter because, okay, oh, I bought something cheap and now it's down 50%. So they take that as evidence of, well, it doesn't matter if it was cheap because it goes down anyway. And they think that's how this is going to be forever. So they kind of stop trying. They give up. Because it looks like everything is trading in the same manner. So it doesn't matter what the companies actually did or doing, what they have, anything like that. You know, I showed the short list a while back where you had a bunch of silver juniors. They all were converging on 35 million Canadian dollars in market cap for some reason. Like every single one of them had the exact same value proposition, same value, which I find highly unlikely. But that's what I'm talking about. It's like they kind of converge. It just becomes a pure emotional voting machine. But that is where the opportunities hide for the ones who understand that the market is totally dysfunctional as a pricing mechanism right now. And that's why, I mean, Rick Rule even laughed when he's like, this market can't even add or subtract. So there's opportunities everywhere when there's volatility or lack of volatility. And this sector is famous for volatility especially. I mean, Western Alaska would say a case of value unchanged, price down as well. WAM went down to $0.49. Had a 27 million market cap. I know, I mean, the market knows they need to raise money and all that. And as we saw, it's like, okay, they did the update. Did the market care? Nope. 75 million ounces of very high grades. AG equivalent. Silver was maybe 1/3 or something like that. So it's not a huge, you know, silver endowment in the first take, but this is a very small, from a very small footprint of the entire Illinois Creek district, or Water Pump Creek district, whatever you would like to call it. So knowing that is 27 million Canadian, is that a fair price for 75 million ounces of 977 grams per ton AG equivalent, given that there's a whole district left to explore? I don't think, I mean, 27 million market cap, you could see companies with soil samples only have that market cap in, you know, the highs of 2016, maybe 2020, not far off. Does that make sense? I didn't think it makes sense. And of course, keep in mind now how it typically works, that the market knows Western Alaska is going to need to raise money if they want to drill this year. So how does that affect people? Well, there's nobody really caring about this sector anyway. Ones who are aware, they're thinking of one thing, and that's like, okay, they're going to take in money. So if I want to participate in a private placement, let's say they give out warrants, I would obviously want it to be a very low valuation, because the liquidity is so small or so low. I mean, like Friday, 24,000 shares traded. If you want to get into a position, if you think this is cheap, you can't even really buy in the open market with any form of size, because you're going to push price up. Compare that to like somewhat maybe intentionally, it's like well, selling or not buying, even on, you know, if there's good news, because you know they're going to be raising, you think the market is going to maybe sell off on that even, and that's the way you get a large position or large stake in the company, and you might get warrants. Obviously you would want the share price as low as possible. So that's the overriding thing right now. Lack of buyers. Well, yeah, lack of buyers, and especially if there's a junior that's supposed to, you believe that they're gonna raise money, you don't see any reason why you should buy in the open market. Further or furthermore, if you have a position and you think, well, I'm just gonna buy my position back in the in the placement and maybe, you know, hopefully get some warrants, you might actually sell even if you think it's a buy, if you know what I mean. So I mean, that's why I don't get offended really anymore about how this junior sector works. Really, not really. I mean, I get frustrated and all of that, but it's like, I know, it's like all of this stuff. The market focuses on one thing typically, and it's driven by emotions. So that is literally, I mean, the fact that this market is so, this sector is so dysfunctional is the very reason why I think you can easily beat it if you have common sense and a long time frame. So one might curse how it works, but at the same time, that's the greatest gift this market has to give. It's so irrational that Rick Rule laughs, and that's with Franco-Nevada, and he goes on to say that it's even worse in the sub 300 million market cap companies. So if Franco-Nevada with like 20 analysts or whatever can trade down 42% when it lost 15% of the value, for example, imagine what's happening in the junior space, how irrational that is. So is that a good or a bad thing? That totally depends on what you do with, I mean, how you navigate this sector. So when you understand how the market works, if you understand that that's probably why Western Alaska looks so one-sided lately. Okay, so you understand how the market's thinking, you understand what motivates people, and then you just, you know, let's say push out the timeline, or let's use some common sense. Is this, you know, was it worth 27 million at the time? Was it, is the market correct that this is never ever going to be a mine? It has a 10% chance of, you know, being worth 300 million, for example. 5% chance of being worth 600 million, which wouldn't even be a tier 2 mine. Given that we know, okay, from that, you know, small footprint, they have 75 million ounces AG equivalent at almost 1,000 grams per ton AG equivalent. That sounds very low. That sounds overly pessimistic in my book, given I think there's a lot of exploration potential left and all that. So if it goes down to, when it was down to again like 27 million, even if you dilute it by 50%, because you know how almost everyone I read on Twitter, let's say, you know, they complain about dilution. I mean, it makes sense that, I mean, that can be a killer and all that. But like, if you diluted Western Alaska with 50%, would it be obviously overvalued even then? Let's say they diluted right now, raised 18 million if they could. What could they do with that 18 million? How could this story look in 1-2 years? Let's say there's a market cap of, you know, 52 million CAD. Could that look very cheap if after they spent the 18 million on top of having this? Yeah, I think so. If they go up to 150 million ounces AG equivalent, that could be I think this is too small to make a mine out of yet. But if they double that, what would MPV be then? I mean, then they're up to like Silvercrest type scenario in terms of grade and size. Silvercrest went into production, has a market cap of 1.34 billion. I think that's more gold silver though, so it's not apples to apples, but still 1.34 billion, 37 million. I hope you get my point. Like, do I need to know exactly how Western Alaska is going to play out if they're going to find 150 million ounces AG equivalent? Does this district have 400 million ounces equivalent potential? I would think so. 500 maybe. Not saying it has to be, but it's like that is not the point. It's like, what's priced in? That's my best defense or offense. I mean, I wouldn't go all in on any one of these, you know, let's say high risk, high reward stories. The thing is obviously that the ones who work, and you give it a few years of it working out, the ones who work are going to go up a lot more than 100%, especially if we go into a hot market environment. And this is the same stock that was up at $5.6 like less than 2 years ago. It hasn't changed that much. They missed the last hurrah in the first holes. Went from 5.6 to 73, well down to 47. That's what, more than a 90% retracement. Is that fair? Is that like, okay, has the case changed that much from within the last 1.5 years? I doubt it. But again, that's the market we're dealing with. So you can get pissed off, or you can like, maybe it's like here, well, maybe here you thought it's like, yeah, Western Alaska. I mean, yeah, you know, it's I think it's undervalued. Has shot at, you know, finding at least a tier 2 mine, let's say. But you were like, oh, you know, I have whatever 2% of my portfolio goes down to here. Not that you predicted that the market was going to be this bad, but it went down here. Then you can obviously like, okay, well, my 2% position is 1% or less now. Maybe now it's actually a great opportunity. Not that much changed value-wise, fundamentally. Just the price went down so much, so now all of a sudden, you know, I should have 3% of my portfolio. So you didn't predict this, but let's say you identified an opportunity. That this went from like your top 20th buy in terms of risk reward. Maybe it's up to, you know, down here was up to the top 5, let's say. So that's my point. Was like I don't really predict much in terms of share price in the short to medium term. I'm always all in. I use volatility. I use the market's irrationalities, like he's talking about, like stuff like this, in order to just value shuffle. Let's say you're down on a stock. Okay, is that good or bad? Well, maybe it went from a good opportunity to a great opportunity, and you have a let's say 50% paper loss. But you think now the opportunity is so good, so you think the store's gonna work out and you're gonna make a lot more from that price point that you triple your position size. So in the end, you might come out making more money on a story thanks to it having gone down 50% or more from where you already thought it was a good buy. You didn't predict it. I did not predict that Headwater, for example, was going to go to 13-14 cents. I took advantage of it when it happened. Yeah. So I hope you get my point. And that's why I think it's actually good. It's like when I write these cases, for example, I try to, you know, this is the merit I see. This is what I, you know, hope is going to happen. This is what the value might be. This is stuff like that. And what you should, because I'm not going to be touting every single, let's say, value shuffle I do, because it's again a low liquidity market. There weren't too many shares available, you know, of Headwater at, you know, 14 cents. And I'm obviously down on the last placement and all that. I don't remember. I think it was at 27 cents or something. Is that good or bad that I was down on that? Well, maybe, but I think, you know, now I added when Headwater went lower than I think it should, way lower. So now it's obviously, I have a lower average all of a sudden. And I think the case is pretty much intact. But that is what you need to, let's say, develop yourself. Because I see a lot of people, they just buy something, then it goes down in price, then they don't know what to do. Or goes up in price, and they tend to want to sell something that's gone down in price because there's, now they feel like, I need, 200% for it to go back to even. For your position in that particular stock to be back to even. But now the opportunity might be really, really great, and you should maybe average down. It doesn't change the fact that your original position is down, let's say 70%. But that doesn't mean the price decline can't end up being a gift. But that's only if you have this price to value gap mentality. Otherwise you're going to be totally lost, because otherwise you're going to want to buy stuff that's gone up in price. You're probably going to end up just buying high, especially from a cyclical standpoint at least. And if you only listen to the due diligence of Mr. Market as the price goes down, you're going to be inclined to sell. Whereas obviously what everyone has heard is that you should buy low, sell high. But if you have no concept of price as it relates to value, how are you going to get greedy when the price goes down? How are you going to get a bit fearful when price goes up? You won't. So anyway, let's try and dig in a bit. Well, first of all, this is kind of interesting. I mean, the Nasdaq QE chart. So it overshot 2000 high, retraced big time. I mean, kind of like, well, it has done that a couple of times. And again, I'm not trading anything based on this. I just find it interesting to look at. So depending on where one wants to put, let's say, the trend line, for example, I mean, China looks like fake breakout, if you know what I mean. Or maybe this is a retracement and it's going to get even worse. I don't know. I don't bet on it. I mean, we're at extremes already, so I wouldn't care. Even if someone said, I think this is going to bounce, it's a retest of whatever this is, and it's like the miners are going to have a worse time. That's what he thinks based on the charts. I don't care. I don't care. There is no chart out there that can make me want to sell juniors, because they are cheap, and that's my only requirement as a value investor. That's why I find this sector to be really easy right now, because it's easy to find something that is cheap. I'm not looking at charts, trying to navigate every single short-term up or down way. No, I look at value, and then again I use the market's volatility and try to use it in my favor. If something is overdone more than some others, I might sell something and buy this. Now it's gone up, obviously. Maybe there's another story that's gone down and is here, when Headwater at least is, has gotten some form of sanity back. Then I at least have the option to, maybe, I can sell whatever went up and buy something that's still, or, is down here. It's even more irrational. That's how I use volatility. And that's when, in my opinion, you start to think like that, you're gonna start not taking the sector swings personally, because whatever the market throws at you, you probably can make something out of it. Everybody curses this bear market. But where else are you going to have an easier time finding future 10-baggers than in the cheapest, than in an environment where this sector is the cheapest it's been since early 2000s? Since back here, I don't have the Huey up here yet, but let's see. Huey. From here to here, or here to here, there were probably a lot of juniors that went up 10x. From here, over the next X amount of years, extremely few became 10 baggers. And now it's the cheapest basically since the early 2000s. So if you're down a lot or want to make a lot of money, you buy the cheapest stuff there is, because then the risks are to the upside. That's where we are. So if you curse this sector right now, you're not a value investor. You probably have no idea what you're doing. You only bought the recent top, and then for the simple reason that you thought it would gonna continue. You had no idea probably of price and value. That's not my fault. That's not the market's fault. It's like I've said a bunch of times, it's not the market, it's us as investors. It's what we do. It's not the market's fault that nobody bought this low here. It's not the market's fault why nobody's buying this low, as we see with the volumes being the lowest since like 2003. Whose fault is that? That nobody buys when it's really cheap. Is that the market's fault? I don't think so. Is it the market's fault that a lot of followers I've added in the last 3 years started buying around this time? No, it's not the market's fault. It's what we did. Every single decision we do is going to add up over the long term. And I can't come up with more costlier decisions than to be selling record low valuations. As a value investor, that's the greatest sin one can do. But most people don't want to take any responsibility. Just blame the market. The market does this, the market does that. I mean, if you're a stock picker, the whole premise is that you think you can pick stocks and identify opportunities better than the market. But then at the same time, most complain about what the market is doing. I mean, as a stock picker, again, it's like great undervaluation sector-wide is the greatest gift we can get. And then people are pissed off that we get the chance to be able to buy a lot of these assets for pennies on the dollar. How does that make sense? I think today is a much better opportunity than 2015. I didn't think I would get a chance to buy juniors this cheap again. But I think they're even cheaper now. You can buy stuff that would trade for 300 million at this point in time for like 30 million right now. And if you haven't noticed, there's not too many tier 1 discoveries being made in the gold space. Supply demand is getting better, and that brings me to this interesting chart. I mean, this is very hyperbolic in a sense. Someone's made a 100-year ratio, called 100-year ratio cycle in miners versus gold. Miners outperformed gold next 50 years as gold standard readopted. 52 years correction into 2020 gave us this recent misery. I mean, is this completely wild? If we imagine that demand for gold is on the upswing, and it's never been harder to put gold supply online, as in permitting risk and jurisdictions getting worse, wouldn't that make sense that you could have decades of outperformance in the mining space? That supply is we know that, I mean, pretty much all gold is still above ground. But still, if there was such a thing that we're going back to some kind of value anchor, that the digitalization, fiatization, artificial financial world, whatever, that we reached a peak, which I think is highlighted by the rise of crypto, for example. If that marks a top in non-tangible stuff versus tangible stuff, is it too insane to think that we might have at least a few decades where it's like people are starting to appreciate real stuff again? Demand going up, while we are having a harder and harder time to find really good mines with really low costs. And even if you find a mine, it's been harder and harder to get it permitted. I think that, I mean, that jives to me. Why would that be impossible? Because every single mine in operation today is going to run out of ore. And we're finding less and less of those really good mines. And the mines we find, or the deposits we find, have a harder time, takes even longer to actually bring supply on. So what happens if supply restraints coincide with current mines dying off, while also coinciding with an increased demand? Why couldn't the few mines that are left, for example, have a pretty good time in the future in that case? I mean, it sounds ridiculous because it's been crap for so long, but I think it makes sense. I wouldn't rule this out, actually. Yeah, I guess this maybe I actually. Well, let's cover a few more perhaps. It's gonna this is gonna probably run over time as always, but so here's a few companies of whose, let's say, management teams, or one in the management team, or an investor, whatever. Well, let's say I met people that had some connection to these companies at least. I talked about the New Quest group of companies, well, at least Headwater. I mean, and I'm a big shareholder in Eloro Resources, which I still think is really cheap. I think there's a pretty good chance that they will find something that's worth mining. I think it's very cheap based on that. The guys, I mean, they have some of the world's foremost experts on board. I mean, the technical team of Inflection is just obscene. It's like ex-BHP people and all of that. Magna Mining, I think this is from a quality perspective and the risking perspective and all of that, I think Magna Mining is probably the best junior I've ever seen. And like I stated quite recently, it's like, well, I'm bullish on nickel and PGMs over the medium to long term. Because I mean, I did that piece on Stillwater critical minerals where I went through, it's like all the let's say macro factors that appears to be going on with nickel and PGMs, and Rick Rules talked a lot about nickel and PGMs recently, why he's bullish on the medium to long term. My point was going to be that I am more bullish on gold and silver in the short term, but I don't think there is a single company that is as a single junior that is as high quality as Magna Mining. Magna Mining is still, it was overshot for a while by Condor actually, as the largest position in the HODL folio, but obviously Condor stunk quite a bit from the last highs. So Magna is back to being the largest position in the HODL folios. I don't care what nickel is doing in the short term or PGMs. I think this is, again, the highest quality nickel or junior that I know of, that I'm aware of. And if this was trading at 300 million, the risk reward would be quite different. Now it's still at 70 million or something, with like 10 million in cash, 2 semi-permitted mines. They recently got the mine closure plan granted. Market didn't do anything. Market did not care. And again, that's a de-risking thing. That brings them even closer to production. The market did not care. The market seems to think that 2 mines in Sudbury here, they're probably going to be almost worthless for the next 10 years. I think the market is absolutely batshit crazy. They will need to finance the mines. That's true. And maybe some are front running, you know, if they're gonna, you know, start building, there's gonna be dilution, whatever. But I think that's way over discounted, if you know what I mean. I mean, I wouldn't mind if they just sat on this until nickel was nickel and PGMs were like 50% higher again. It might take a year or two. But this is worth something right now for sure. I think they could make money on Green Hill. I think they could make a lot of money on Green Hill ore right now. Even more obviously when PGMs and nickel rebound. I think it's absolutely crazy how cheap this is. And then I'm a medium to long term nickel PGM bull, as per Rick Rule. I think it makes a lot of sense. So I'm more optimistic. I'm more excited about silver and gold in the short term, but still, this, in my opinion, is such a high quality story that for the HODL portfolios, which has a more passive, don't do much, bet on the management team stuff, this is the best I've been able to find yet. They're total pros. I think, again, market is absolutely batshit crazy, and I don't necessarily mind it that much. I'm not in the Magna forum bitching all day, because that's telling you have a, let's say, a sense of loss of control. I think it's super cheap. I've actually added some in the HODL portfolio since it went down. Is that a bad thing? Well, if this becomes what I think it could become, I mean, the HODL folios are going to make even more on Magna. Magna has never been more de-risked than it is now. And still the price is the same as it was 1.5 years ago. Let's see. Yeah, it's back to 47 cents. I mean, it's back to wherever here. Okay, it's up to 77 million. Enterprise value of less than 70 million CAD. I think this is an absolute joke. I think it's more of a joke than Franco-Nevada going down 42% on 15% drop in value. Magna has not dropped in value. Magna has added value with de-risking stuff, and still the price hasn't reacted. So you can be pissed about it, or you can think like, maybe it has an even better shot now, since they have been de-risking, that Jason will get his wish that he's not gonna, sell a single share until it's at $1 billion market cap. Magna Mining is pricing in, at face value, 7.7% chance that Magna is gonna fetch a $1 billion market cap one day. I think that's way too pessimistic, because again, it kind of entails that they're gonna screw this up. Nickel and PGMs in Sudbury is not really gonna be worth much, and they're not gonna get these 1 or 2 of these mines into production. Yeah, simple as that. Note I'm biased, obviously. Me and the family have a lot of shares in Magna. We have also, Alpha Exploration. Met with Alpha. They didn't have a booth. They're frugal. But I gotta run through on the geology. So what appears to be is that they think they now understand kind of the controls, what's happening in at Aberna, and this is now the flagship project. I mean, they have a bunch of projects. They have Anagulu, that's the copper porphyry. They have had intercepts like this. It's more costly to find the meats of a porphyry, obviously, but it's like, talk about smoke, if you know what I mean. And they kind of believe that after they've had other experts take a look at it, that this might actually be where the meat is, but that's no guarantee, of course. At Aberna, they've actually, they are in the meat, so to speak. And they have Tolejimia, very early days here. And they have the Kosolda gold prospect. As far as I understand, they've only done a few holes. I don't remember where exactly they put a few holes. But they haven't even tested the let's say the largest and meatiest soil anomalies. So this is still, I would say, probably world-class, target that's not even touched yet. Okay, then the copper and then the VMS. But now the main dish is Aberna, which they think they have kind of cracked the code. So they believe there's like plunging chutes. I think it's going, down, let's say, into the ground with a dip, I think in these directions, to the northeast. So if that's true, and they released, you've seen probably some of the highlights recently, where it was like 80 meters of 15 grams, 49 meters of 2.75 grams. Those are world-class intercepts, obviously. So if they have an idea of the control, that means their hit rate is probably going to go up. If they're right, they know which way the mineralization goes at these targets. And down here, it's believed that it's more of a, let's say, brittle host rock, meaning that it's like you crack a glass, a car window, it cracks in a bunch of directions. So it more acts like a sponge, perhaps. Here's more structurally controlled. Probably the same system, same fluids, but like the host rocks were different. So when the fluids came up here, they probably cracked the granodiorite and spread out like a cloud, let's say. Whereas here it appears to be more a typical lode kind of thing, structurally controlled, more concentrated, and they think which way these are dipping and how they're gonna follow it up. So let's say they go. If you follow these to the northeast, they go down in the ground, down in the ground, down in the ground, whatever. And you can see the scale bar. This is 7 kilometers. They have like one structurally controlled system here, let's say, and this might be more disseminated type system. I think there's multi-million ounce potential here, for sure. 7 kilometers of I was gonna say soil anomaly and stuff like that. So I'm participating in this private placement now. I know Quinton is very optimistic on it, and look at the team. This is one of few gold stocks I own. I think this has a tier 2 plus potential, a Aberna only, and then you have a bunch of other targets. Red Pine. I talked to a big investor in Red Pine who's very bullish on it, and I would agree. There's like, what? I'm thinking, what are some of the good high grade, let's say, gold plays in Canada? There's like Goliath, Scotty Resources having success. Then there's more delineated stuff. I would put Wallbridge in that. That stock has absolutely been massacred. They have billion shares out now, so it's been diluted to hell. But still, like NICU Eagle is a shareholder. They came in, or they participated at least in a private placement. I assume it was the first entry late last year, if I remember correctly. You have Eric Sprott in it. So the share count, the share structure is absolutely horrible. But still, I think that has merit, because I think they have like 3 to 4 million ounces in Canada, which is not bad at all. But Red Pine, in a mining camp, kinda, close to other operating mines. Alamos Gold is a shareholder. They have a market cap of only like 37 million Canadian, and I think they have one of the best gold projects in Canada. It has a, I mean, the old resource is quite outdated and it's not large, but it's like, I think this is a multi-million ounce gold camp, and it's not pricing in any sort of chance that this is what they have is even going to be a small mine. I think that's pretty ridiculous. I think that's also why the CEO departure of chief executive officer, my bet, and I posted it here, I assume that it's like maybe shareholders who are, let's say, not too pleased that they thought that, hey, Quentin, I think that's his name, Yari, that he was not good enough of a salesman, if you know what I mean. Because they keep putting out good results. It's in Canada. It's like they got some permits going. Good location, great jurisdiction, great system, and it was only, I mean, recently down to 30 million CAD, which again, in a hot environment, almost a junior with only a soil sample anomaly could reach close to those kind of highs. So this is, I mean, I would say a very high quality story, but it's trading like it's anything but a high quality gold story. So I've added a bit of Red Pine as well. Mawson Gold, I spoke to Michael Hudson, really great guy, and I talked about Mawson recently. I think my when I talked about it on K Report proved to be very timely, because Mawson started to ramp after, or you know, it got halted, and then they released the highest grade intercept they've had, I think. The beauty with Mawson is that they have a subsidiary, Southern Cross, which has made one of the best discoveries in recent times in Australia. And here's the chart of Southern Cross. And Mawson owns, I think, 51%. They own 93.75 million shares of Southern Cross. And they were locked up 2 years. That ends May 16th. And they plan to dividend out all the shares in Southern Cross to Mawson shareholders. And the Mawson, or the Southern Cross shares right now are almost as valuable as Mawson itself. And Mawson has a bunch of well, Mawson is set to focus on its Swedish uranium and gold projects in time for when hopefully the uranium moratorium will be lifted. If I understand it correctly, they had these. They might have had all of these when Mawson used to be a uranium junior, focused on Sweden. Then the moratorium came into effect 2018, killed everything uranium related. But before the moratorium was put in place, which I hope to be lifted this year, I think they had a market cap of around 150 million. So that got killed. They had 150 million when you could do something with uranium in Sweden. Moratorium hits. I mean, at face value, obviously they're kind of worthless in that case. So, I mean, kind of in a sense that, okay, assuming they lift the moratorium in Sweden, these projects that fetched, 150 million market cap for Mawson back in the day, that would come back into play. And you have right now almost the entire value of Mawson is backstopped in Southern Cross. Plus they have a gold project as well. This is the Boliden mining area, and you have Barsele to the west here, I suspect. I don't know what this is going to be worth, but they have done limited drilling and hit, you know, high grade gold, etc. And it's like it's a great pair of guys. Michael Hudson, if I remember correctly, I think he's worked in Sweden for 20 years. So it's not like they're latecomers, they don't know anything about Sweden or anything like that. No, they're kinda, Mawson would be going back to its roots with gold and uranium in Sweden. Here's the Southern Cross project. They have some pretty obscene results down there, not too far off from Fosterville, etc. Here's Fosterville. Here's Sunday Creek down here. I guess it's more akin to Costerfield than Fosterville, because they have antimony, etc. Still, I mean, I think this, you got Michael Hudson. I'm not 100% sure if it's in Mawson, but I think Pierre Lassonde is involved with either Southern Cross or Mawson, so by extension it doesn't matter, because on a market cap basis, Southern Cross is Mawson, and Southern Cross itself is obviously Southern Cross. So I find this to be a very high quality gold uranium story with great management team. Not the cheapest one there is, obviously, with Mawson at 180 million Canadian. From an absolute perspective, but I still think it's cheap. Because this looks like you know, possibly a tier 1 discovery down in Australia. Then we have, I mean, Eloro, for example. I met briefly with Tom. I mean, not much have changed, I was gonna say. It's like you still have the, well, now it's obviously been, and this wasn't a big surprise. I mean, this is again what happens. You can see that in Western Alaska, and that's in, again, Alaska in North America. When the market knows they're probably gonna raise money, especially in a bear market, you see stuff like this. Because again, going back to, well, if you want to have a position, and here, for example, a warrant as well. So if you want in with size and you like the idea of a warrant, you obviously want the share price as low as possible if you're gonna buy in bulk, especially if you get a full warrant. You want the price to be as depressed as possible if you thought you were gonna be able to enter a private placement. So it's again, it's the shenanigans that happen in this sector, especially around the, you know, private placement times. It's unfortunate, but it is what it is. The capital markets are pretty horrible. It's like I've spoken to quite a few, said it's like, you know, worse than 2015 for juniors raising capital. I mean, I think it's slowly getting better with gold and silver going up, but it's still not, I mean, there's not a lot of money out there anyway. But the case is, in my opinion, quite simple. Iska looks like a huge polymetallic system. In Bolivia, it's like the jurisdictional risk is, I mean, it's a real thing, obviously. But in terms of permitting and stuff, I mean, I think Bolivia is probably one of the easiest jurisdictions in the world to get to build a mine. It's more the, you know, ownership, like will you be able to keep the mine? That's more of a problem. But at the same time, San Cristobal has been mining since, oh, when was that put in production? I think it's been mining for 15 years or something. and that hasn't had any problems. Well, it's probably had problems, but you know what I mean. I mean, they have been able to operate Sumitomo, and now it's obviously, you know, a Quinton Henny-led team that's operating that. But for around, I think, 15 years, San Cristobal has been able to, you know, make a lot of money for Sumitomo. But it's like with jurisdiction, it's hard to say exactly what's going to happen. I think with more drilling, etc. I think Iske is an absolute monster. On paper, it obviously has obscene beta right now to silver, zinc, and lead, and even tin. But I think this is going to get better and better. I think Iske is going to turn out to be at least a San Cristobal with time. And yeah, I mean, that's pretty much it. I'm looking forward. They're planning on to do a PA this year. I look forward to that. But I would obviously hope, like with more drilling, I think they're going to prove up a lot more of high-grade ounces, which would obviously make an economic study very different. But I wouldn't be surprised to see, you know, a net present value that's very much higher than the current market cap. What I think, or what I think this story really needs, is more third-party validation, because there's been few juniors that have been bashed as hard as Eloro, and I've covered this a bunch of times. Mostly that it's an arsenic mine that's proved to be completely false. But I think that most people that call it an arsenic mine, I still have not seen anyone say that, oh yeah, you know, I was kind of wrong there. And I won't expect them to do so. And I think the people that listen, most people, especially retail, like, they see a bunch of people bash a story, since they don't know any better, I would say. I mean, they treat them as authorities, so if they say it's a worthless mine because it's full of arsenic, they don't come back. I mean, they don't care. They won't take a look at it again. So Eloro had an uphill battle with perception for the last 2 years, regardless if that perception proved to be false. And now obviously you have also you know, that's been called ultra low grade and all that. I mean, yes, the global resource was very low grade. That I gotta agree with that. But that's probably due to lack of drilling, because the average, you know, drill hits were much better than the resource, and that's why I said back here, whatever, when the resource hit, that I think it's gonna get better. That's just a snapshot view, and it's underappreciating Iske. And since then they put out some drill hits, which kind of shows that, hey, I mean, there are high grade bulk stuff here. So I think Iske is just going to get better and better with more drilling. I think the NPV is going to show that this is very cheap, but you're always going to probably have that, you know. I mean, even if we kill the arsenic story and it's only low grade story, it's still, you know, battling Bolivian perception in a bear market right now. But I think this is, if I had to bet, I think this is going to end up being a mine one day, worth quite a bit. And it looks like it's an absolute monster of a system. So maybe like San Cristobal, once it gets up and running, it's going to be running for decades to come. Can I guarantee that? No. Is the market pricing in that this is going to be a, you know, big mine? Nope. That's all I know, if you know what I mean. Silver 47, Brixton. I met with Gary Thompson. Obviously, Brixton I think is very cheap. I mean, Ivanhoe Electric is drilling away at Hog Heaven. that still belongs to Brixton, but they Ivanhoe can work up to 75% interest, and that's obviously Robert Friedland's North American junior. Then they have the BHP, Camp Creek with BHP. They have the Langis project and all of that. So it's like there's a lot of, if Robert Friedland finds something Robert Friedland-like at Hog Heaven, this 25% that goes to Brixton would probably make Brixton very undervalued at today's market cap. Is that a guarantee? No. Then they have the 100% Camp Creek project, which BHP is funding the drilling, obviously. Is that a guarantee that it's going to turn out to be a BHP, size price? That's no guarantee, but it's not closing in anywhere close to that, especially if you subtract the other, Hog Heaven and Langis and the other, Metla targets and Trapper and all of that. So based on the sum of its parts, I just think it's widely undervalued, albeit high risk. So it's undervalued based on a couple assets with very high risk, high reward potential, and more targets to boot. So again, some of its parts, I think it's very undervalued, but it's, I think, gonna be one of those maybe binary outcomes. It's like if this year, for example, because they raised a lot of cash, if they put in a slammer of a drill hole into Camp Creek, which makes it like, yes, okay, this is all of a sudden a BHP price in the eyes of the market, they could have one of the most violent revaluation stories around, I think, because obviously BHP wouldn't be interested with anything less than at least $2 billion in NPV, I think. Probably more than that, perhaps. But it's like, yeah, BHP, largest miner in the world. And then he has the Silver 47. That's a private story yet, but that looks very interesting. I'm actually a shareholder. It's VMS in Alaska, and it's a high-grade story, a VMS district. If silver does well, I think Silver 47 can do well. Astro Exploration, got pitched that one, looks very cheap. You can look it up for yourself. I think they're doing a placement right now. I'm probably going to try to participate. But again, it's like, it's quality people involved. It's just, as always, it's like I get more buys than I have money, if you know what I mean. Just this list, for example, I think all of these are buys, and that's absolutely not a complete list. So it's more like, okay, how much do I take in every single one of these, etc., etc. So I think that's a wrap for now. This video, went on longer as per usual. Oh, and I haven't touched on that yet, but the Fathom news, they drilled a couple of holes, or they drilled a few holes into Albert Lake, which was really the high risk, high reward story. They did not hit, they did not make a discovery hole, so they're actually going back to Goldshagger to spend, let's say, the rest of the budget there, where it's like we already know there's a nickel system there, they've already tagged it and all that. So as always, you have, let's say, obviously there was a reaction. When was that release? Here maybe? No. Wait. March 13. Okay, so that was this. I still think it was, what's that, like 40% maybe? Like always, there's, I don't get really upset with it. So it's like, I know what the price is, that if they were to hit at Albert Lake, if they made a discovery, the nickel sulfide discoveries, they have, again, some of the most violent revaluation stories there is. Top, 6 of the best performers within the 6 months of a discovery are like nickel sulfide stories. And it was trading at a 14 million market cap, and they can sell for billions of dollars. So it's like, I don't know what the chance of success was, if it was 5% chance of success just based on Albert Lake, I think Fathom would be cheap. But they also have the Gold Shagger. So it's like, would I wish that they hit? Obviously, I mean, in that case, if they hit a discovery hole on the first few holes there at Albert Lake, I mean, maybe Fathom would end up being the main breadwinner this year in the portfolio. They didn't, but they're gonna go back to drill Gold Shagger. So that's what I also like. It's like that's why I also participated, I mean, quite bigly in the last placement. It's like, you still, first of all, I get warrants as well, but it's like, you still have the Gold Shagger in your back pocket. If Albert Lake comes out as a surprise, that goes from, let's say, almost pure grassroots to maybe the better of the two assets. But there's still a lot left to do with Gold Shagger, in my opinion. I mean, they have some plates they haven't followed up yet, and they're going to be following up now. So it's like, is there a guarantee that Fathom will put up a nickel sulfide mine at either Gold Shagger or Albert Lake? No. But it's not priced even it's priced like they have no shot. It's priced like there is nothing there. There's like, I mean, it's pricing in 1/10 of 100 million market cap, 1% of a billion, and we know what, you know, a real nickel sulfide discovery can fetch in value. We've seen the takeovers for easily over $1 billion. So let's put it like this: if there's a 5% chance they're gonna make a discovery, you know, or prove they have a discovery anytime soon, 5%, I think Fathom is cheap. So and maybe the odds are 20%. That's still 80% chance of failure. But if the 20% chance hits, we might get 10, 20, 30, 40 bags from Fathom. So it's like, it's not a story I'm all in on, but it's one that, yes, from a diversified high, you know, to have in a diversified portfolio, high risk, high reward, and I don't know what percentage I have in Fathom, maybe 1.5% or something. There's no way that Fathom can kill this. And first of all, it's already cheap based on Gold Shagger, but still, it can't break the portfolio. But if, God willing, they show the Gold Shagger is the real deal, this, even at, you know, a 1.5% position size, that can materially impact the portfolio in a positive way over the coming years. Maybe, who knows? I mean, maybe it could pay for, again, assuming, let's say there is a 20% chance of success, serious success. Okay, 20% chance. If that 20% happens, maybe it goes up, let's say 20x over the next 2 years. And well, even more than that if it's for real, obviously. But then, I mean, that would be kind of, you know, 20x at face value from this price. That would pay for a whole trough of similar size stories that went down 50% or even 100%. So that's why it's like, I don't get, I know this is high risk, high reward. I don't get too upset. I mean, I know there's typically, I mean, as always, let's say you have a very cheap junior that's pricing in 2% chance of success. So even if the real chance of success, if anybody could know that, which no one can, but even if it was like 10% chance of success, 90% chance of failure, it would be really, really cheap. Even if the chance of failure or the risk of failure was 90%, simply because it was pricing in a, let's say, 99% chance of failure or risk of failure. But still, what mostly often happens is that whenever one of these high risk, high reward stories don't pan out, or especially when, you know, a maiden drill campaign doesn't hit the jackpot, it's like everybody's like, oh, the travesty. Is like, oh, it's like, well, factor in that if they were to hit, you could get, you know, 10, 20, 30x your money. They're not supposed to have a high hit rate. That's why you get such a, you know, abnormally disgusting large returns in the few cases that actually work out. So it's like success is the exception, not the norm. So now, I mean, I'm hoping they can show they can hit, you know, a depth there at Gold Shagger, and you know, it might be game on all of a sudden. I don't know if that's gonna happen. I just know there's certainly a chance, and not much of a chance is priced in. So that's good enough for me. But I'm not gonna lie awake and, you know, go put 100% of my portfolio in a store like this. But it's just one of many high risk, high reward stories. I don't know which is gonna pay off. But maybe, you know, 1 in 5, if 1 in 5 pays off, if I hold them long enough, they pay for all the other ones. That's the high risk, high reward business. And that's why, especially at a time like this, when beta is selling so cheaply, you shouldn't be like balls to the walls in a high risk, you know, highest risk, high reward stories, in my opinion. So anyway, thanks for listening. Have a great day, and consider me very biased. I probably own shares of all companies I mentioned. Some are banner sponsors as well. So yeah, have a great day. But not investing advice. Bye bye.